This is an RNZ podcast.
Hello and welcome to this episode of Your Money with me, Mary Holm. Thanks for taking just a few minutes to listen in while Jessie Mulligan and I talk through some useful ideas about how to make your money work better for you. Just remember though, this is guidance. Final decisions are up to you. Over to Jessie.
Mary Holm, who joins me now. Hello there.
Hello, Jessie.
What's on your mind this week, Mary?
Well, I've been thinking about insurance, actually, because, for a couple of reasons. There's been a few emails from listeners. And by the way, listener emails certainly don't always get answered ever. But sometimes they sit, because there's way too many.
Yeah.
Sometimes they sit around for quite a few months. And then when there are, two or three on one topic, I put them together and you and I discuss them. So people shouldn't sort of just give up if they haven't.
Yeah, and nor should they email you like, "Dear Mary, my house is on fire. How should I put it out?"
Probably not. And I would be saying they should have insurance, which is actually the topic for today. So, the other thing that's happened is the Financial Services Council a little while ago did a survey on insurance, and so through this session I want to mention a couple of the results from that survey because they're quite interesting and in some cases quite worrying.
Yeah. Can I ask you, in good faith, Mary, do you find insurance a bit boring?
Yeah, I do. And although, as I said in my book that's out there, the one called Rich Enough, just to get a wee plug in, I say at the front of the chapter that talks partly about insurance that it's not actually as boring as you think. I think the feeling that it's boring is partly because you get pages and pages of small print, and that's often anything but boring if you find it doesn't actually cover what you hoped it would cover. And I'm very annoyed with the insurance companies about that. It's not okay for them to wriggle out of something on the basis of something that's in sort of 8-point type or something. It's really, but there are a lot of there are quite a few websites that do reviews on what insurance has worked out well for people and, which companies are good at it, etc. And I'm sure Consumer, for example, New Zealand has got information on which insurance companies have come out well. So it's not a good idea for people to say, I won't bother to insure because insurance companies go around and rip everybody off and it's not worth doing. Because most of the time they do pay up. It's the ones when they don't that we hear about.
Yeah.
But personally, I've found them pretty good, surprisingly good at times when I've made claims. Have you?
Never made a claim, Mary.
Really? You
Yeah.
haven't ever had some other driver, when it was 100% their fault, drive into you? Or
No, I've been lucky, I suppose.
Well, you sure have. Yes. I've had a flood in the house and where there was a $500 deductible for damage to the house and another $500 deductible for damage to items in the house. But the insurance company came across and said, we'll only make one deductible. In other words, I had to pay only one lot of $500, whereas I thought I would have to pay two, one for the house and one for the furniture, and that was really a pleasant surprise. And I think that sort of experience is not actually that uncommon for people.
Yeah, I guess the other reason, I don't know if this is a boring reason, but it feels like money that's going, right, and you're not getting any tangible benefit from it. And it's quite hard to pay that money on a regular basis, and you kind of wonder, why am I doing this?
Absolutely, but as I think I've said to you before, if you actually keep paying insurance premiums and you're not making any claims, you're the lucky one, even though you might feel as though you're being ripped off.
Yeah.
Because you're getting nothing for your money. One thing you definitely are getting is peace of mind, and every time you hear that someone else's roof has been torn off in a tornado, or all sorts of things happen to people. You probably take a little bit of comfort in knowing that you have got insurance covered for that. But the ones who claim, I maintain, are the unlucky ones actually, because they will get more back from the insurance company than they put in, but they've had to contend with all sorts of horrible things happening.
I mean, to that I'd say the really lucky ones are the ones who didn't pay and didn't have to have anything happen to them, but you can't really rely on you being one of those, can you?
No. Well, a lot of New Zealanders do. In other words, they go around uninsured, and they are really lucky, yes, if nothing bad ever happens to them. But it's probably rare for someone to go through life with, no damage to their car or their house or their furniture, or a period out of work or serious illness, or ultimately dying. I mean, that happens to everyone.
Yes, that can be a bit unlucky. So what does this survey say then?
Well, one of the main findings was they said 28% of New Zealanders said they were at high risk of having a major financial problem if a serious event happened to them or their family. So that's just over a quarter, which is maybe not too bad, but then another 36% said they're at moderate risk, and so we've got nearly 2/3 of New Zealanders saying they're at high or moderate risk of having a major financial problem if something goes wrong. And interestingly enough, those who reported they were at low or no risk were most likely to be under 24 or over 65. And I imagine the under 24s, a lot of them haven't got a lot of stuff except perhaps a car, quite often a car, but not always. And perhaps they're in a flat. And you can, by the way, get insurance for the contents of a flat, your possessions, even though you don't own the house. But they probably tend not to have a lot to lose. And over 65s, I suppose, maybe as people get older, they get more cautious. I don't know.
Yeah, although... So basically you're saying if you're over 65, you don't feel that you're at major financial risk.
Right.
But I guess that's because you have a set income via the pension, and so
Yes.
even if you had an accident, your income wouldn't be affected.
That's definitely part of it as far as loss of income goes. And a lot of them have got, they haven't got huge big debt. They've got perhaps a mortgage-free house, if they're lucky, and so they're not, obviously they'd still be in terrible shape if the house burnt down, but they haven't also got a debt. I mean, the worst thing is if you have a house with a sizable mortgage and the house burns down, not only are you left with no house, but you also still owe the bank a whole lot of money. Terrible situation to get into. But nonetheless, there are a lot of people who are underinsured, and so I wanted to look at 3 different types of insurance today. One is loss of income, one is life insurance, and one is health insurance, partly because we've had emails from some listeners about them.
Yeah, okay.
On the loss of income, just to say, in the survey, 37%, so more than a third, said they've got enough savings to cover mortgage or rent if they're off work for 3 months or more. So that more than a third say they're okay, but there's still nearly 2/3 who are not okay, and 20% are strongly not okay.
Well, we heard from Heather. She's in her mid-50s.
Yes.
She says she intends to work in a paid capacity for another 13 to 15 years. Her house has just become mortgage-free. Well done, Heather. And she's in KiwiSaver. Should I have some sort of insurance if I'm unable to work, she asks. I've looked at various products. They're expensive now and will only get more expensive each year. Is there any type of cover you'd suggest? That I consider? For example, cover for a serious illness, or am I better maximising my savings instead? What a good question.
Yes, it is. And I would say, no, I don't think Heather's better off just maximising her savings, because people quite often say that, I'm going to self-insure, I'll just save a lot of money and cover myself. And that's great if the problem happens 30 years down the track, but, it might happen next week and you're set off on your self-insurance and so far you've got $100 in the account. It's not a very safe way to do it. Heather's quite right that premiums for loss of income insurance will rise as you get older because you're just more likely to have health problems. But I still think it's a good idea to get it. I think most people should probably just get it if they're off work for 3 months or more. because the premiums are much lower than if
Right.
you're off work for only 1 month or so. And because a lot, and if you reckon you could manage for up to 3 months, it's best just to pay those lower premiums. The other thing about that insurance is that it either covers you until you turn 65, at which point New Zealand Super steps in, or sometimes it covers you for a shorter period than that, through your life. So if you've got a serious illness now, and Heather's in her mid-50s, the cover might only last for 5 years, and she's got to think about whether, when she turns 60ish, can she then manage on other money. So you've got to have a close look at that. The other point about loss of income insurance is that sometimes companies, your employer will pay you, they certainly will in nearly every case, I think if you're sick for a short period. So a good idea to ask your boss, if I got a serious illness and I was off work for 1 month, 2 months, would my pay continue? Because that's an important question, of course. Yeah.
And you might be surprised that they, if you're a valued employee, they might be willing to sort of bend the rules a bit. I know of a guy recently who's had some bad news with a brain tumour, and he was like shocked really at how generous his employer was. He'd been with them for a few years, and they said, just take as long as you need, and we'll look forward to you getting back here when you're well again. And it was actually a pretty heartwarming moment in a tragic time.
Yeah, that's a lovely story to hear, and it's probably not that uncommon. If they value you, they want to keep you, and they want your workmates to know that you're being looked after too. I think it sort of creates goodwill in the whole workplace, really. Yeah.
Okay, here's one on health insurance from Martin. When our family came back from overseas 20 years ago, we bought medical cover for the first year. Every time we tried to claim, we were excluded for a variety of reasons. So we went to see our GP, and he said that for people who are young and healthy, the state system is sufficient to cover most accidents and emergencies. So we stopped the cover, and since then, despite 3 major health scares, we've found frontline care in New Zealand to be generally excellent. Most of my generation are now getting age-related conditions, but having to withdraw due to soaring premiums. And not everyone gets covered by work. A bit of an observation from Martin.
Yes, interesting. He and when he says most of them are getting age-related conditions, but having to withdraw, excuse me, I assume he means withdraw from health insurance.
Yeah.
Yes, yeah. So a couple of points about that. Firstly, similar to loss of income insurance, check what sort of health insurance work covers. Some workplaces give you some coverage, and it's a good idea to note that, but be aware if you change jobs. It's easy to think, I'm okay, and forget that you're okay because of your boss's coverage when you move jobs. Another point too about where he says they made some claims when they first came back to New Zealand and were excluded for a variety of reasons. Once again, I suggest people check different websites to get reviews. If you Googled something like review insurance, I think you'd find a few websites where you're getting information on how many people have had problems with the different insurance companies. But frontline care is often impressive. He has said we don't feel the family really needs help because when we've had major scares, we've been covered. And I think in New Zealand it's true. We don't leave people lying out in the streets injured, asking if they've got health insurance, and if not, leaving them there. Yeah. So I think, in emergencies, the care is generally regarded as pretty good in New Zealand. And a lot of the top medical specialists work in the public system as well as in the private system, and so it's not as if you're getting inferior care from people. But I hear more and more stories about people who have got longer-term care. They don't always get as fast as they'd like. There's lots in the media about people developing problems with cancer who it takes quite a long time for them to get onto treatment, and that'd be a terrible situation to be in. Yeah. And also, if you want non-life-threatening operations such as hip replacements and knee replacements, you can wait a long, long time. And I've known a few friends where it makes their life so much better when they get the hip or knee replacement. You don't want to be hobbling around in the meantime waiting to go in the public system. So for older people in particular, the health insurance and premiums go up really fast. I know it's awful, but they do that for a very good reason, because older people, spend more on their health. They have a lot more problems. And so I would recommend that people, if you have to sacrifice other things in order to keep that health insurance going, I think it's a really good idea for peace of mind. You don't want, when things go wrong with your health, to suddenly find you're in financial trouble as well at the same time. Awful.
What did the survey have to say about life insurance?
They said that only 20% of the people had worked out what the financial impact on their household would be if they died, and that's shockingly low. So 80% haven't. And I really recommend people just sit down and have a think about where everyone else in the family would be if they died tomorrow, because as we all know, it can happen, usually not, but it can happen. And it applies to if you've got someone who's not in the paid workforce, but they're at home looking after the children or looking after elderly people. If they died or actually became impaired, because you can get insurance that also covers disabilities as well as death, then the family would probably have to find someone else to do the looking after of the little children or the elderly people, and that would cost money. So it's really good to get that coverage.
Yeah, Martin reckons he's sussed. He said, when the mortgage finally disappeared last year, I stopped my life assurance policy because of soaring premiums and transferred those payments to my KiwiSaver, which is now hopefully enough for my wife if I shuffle off the coil earlier than my preference.
Yes, and he said that the mortgage has disappeared, and that really is the two things that are most commonly should trigger people to think about life insurance are getting a mortgage and paying off a mortgage. Obviously when you get the mortgage, you need to up the insurance to cover that if you die. And once you've paid it off, you're a whole lot freer. And the other is when you add children to the family, or when children are no longer dependent on you, or any other dependents for that matter, such as elderly people who might be living with you or whatever. When those are added to the family, you're going to need more insurance, and when they're no longer in the household, you don't. But so Martin might be okay if he's got to the end of the insurance, then got to the end of the mortgage. Then that probably is a time when he can review his situation, and if he's got enough in KiwiSaver to cover his wife and enable her to live comfortably, and there are no other dependents, well, yes, why not stop your insurance at that point?
Okay, but Jane says in another email, and by the way, if you've just tuned in, I'm talking to personal finance expert Mary Holm. Jane says, my husband wants to pay off our children's student loans for them and set up a life insurance scheme, but I feel we're better to help them in other ways, like KiwiSaver or property. Who is right?
Yeah, and just briefly, you could do a whole session on this, but paying off student loans is an interesting one. I say pay them off only slowly, because they're interest-free only as fast as you have to. Someone tackled me on that recently and said that, Mary, that's not ethical for you to be saying that to people. The taxpayers lent them money. And so, look, I'm open to that discussion, and each person's got to decide that for themselves. But the idea in this case, the husband's also talking about getting the children life insurance, and he's probably very well motivated, but it's quite possible if they're younger and they don't have children of their own, that they don't need a lot of life insurance. In that situation, if they die, terrible though it might be, there might not be anybody who's in financial trouble because they died. And so I would wait until they are in the situation where they've got dependents on them. And instead, I think the woman's idea, Jane's idea of getting into KiwiSaver or property is a good one.
Jane, you win this round.
You do.
How often are you asked to be an arbiter in marital disputes, Mary?
Look, it happens in my Herald column quite often, really, and I'm always a wee bit wary about it. But
you don't always go for the woman, do you?
Absolutely not.
No. Don't mean to impeach your neutrality there.
Yes. There are a couple of just quick points, if we've got time for them or not.
Of course.
Just about insurance. On the health insurance, if you find your premiums are pretty high, it's quite a good idea to just get coverage for surgery only rather than GP visits.
Yep.
And that you'll find your premiums are a lot lower then, and that means you've got cover when big bad things happen, and you can kind of self-insure for the GP visits. You know, every time you go, you can say to yourself, well, I do have to pay for the GP visit now, but I didn't have to pay such high premiums on my insurance. So that's one way to sort of handle the high premiums, especially as you get older. And the other point about life insurance, there was a story in the Herald recently about a guy in his 90s who had cover for only if he died in an accident, and he fell, and as a consequence of that he ended up in hospital and died, some weeks later, I think, from pneumonia. And they wouldn't cover it because they said he died not from an accident, but from, sorry, froggy throat, but from the pneumonia. And that's the kind of thing that can happen. And with accidental death insurance, and in any case, very few people actually die from accidents. If you think about the people you know, the vast majority of people don't die from accidents, and that's why accident death insurance is very cheap. And people think, I won't get full life insurance, I'll just get insurance for accidental death. Not a good idea. It's if you're dead, you're just as dead whether you died from an illness or an accident, and the family's got to cover the costs in just the same way.
Thank you, Mary. And the other thing that I learnt from you that it's a good tip is that if you're prepared to pay the first few $100 or $1,000 of your healthcare yourself, you can get a lower premium as well, right?
Absolutely, and that applies to insurance of cars, houses, property, and all of that. If you
sort of best of both ways, isn't it?
Yes, it is. If you're prepared to pay the first whatever, then the premiums are a lot lower. And that's where you do self-insure. If you've got a bit of money in your rainy day fund that can cover those first few $100, then your premiums are going to be much lower. It's a good deal, really.
Mary Holm, and if you came in late or you would like to look up Mary's thoughts on any other financial topic, you can find her on our website, rnz.co.nz. Head to the podcasts page and you'll find a list of topics. Great to chat with you, Mary. Thanks so much.
Bye.